major averages bouncing off session lows as stocks grapple with today's hotter than expected inflation read. And, of course, more bond yield volatility. Our next guest, though, making some big moves within his portfolio, seems to always be doing that, which is why we like having Kevin Simpson of Capital Wealth Planning right here at Post 9 to tell us. I mean, you remain pretty active in the market. What does that say about sort of your psyche about where we are right now?
Well, I'm still nervous, so we're trying to find opportunities. Some of these moves are because the stocks have underperformed so much that we're bailing on things. We use a relative stop loss, and eventually the pain gets too much, so you move away from them. Mm-hmm. The good news is you did a great show earlier this week about dividend growers, which is the world that I live in.
Sure.
And I feel like there's momentum starting to build up under the surface.
Right, not just dividend payers, dividend growers.
Yeah, big distinction, because I think the high dividend stocks for many years was a proxy for fixed income. You know, you'd look for that when there was no alternative. Now there is. I mean, you can get 5-6% in the money market now, and that feels great. In fact, I saw something that said there was over $6 trillion in money markets right now. Unbelievable.
Not surprising. So on that note, been a bunch of focus on staples stocks, right, that have, over the last few weeks, have really gotten hammered. Now, some are rebounding nicely. You know, Pepsi's earnings helped. That stock was up. You sold General Mills. It speaks to sort of this pain that you endured, and I suppose you threw in the towel and said enough is enough.
We did, and that's the problem. You know, we love the company. I can't believe how poorly it's traded, but when we have a relative discipline, we're going to stick to it. So if a stock underperforms, we move away from it. You know, we still have exposure to the space with Coca-Cola. It's performed well. If it has anything to do with what Pepsi did to kind of mirror that, then we should be in good shape.
Did you buy more of that, by the way? Did you buy more Coca-Cola on its pullback and on Pepsi?
We haven't owned Pepsi in quite some time, but we have been buying Coca-Cola pretty aggressively on the pullback.
Oh, you have been?
Yeah, I think that there's value there. The dividend growth, just a stalwart company. Pepsi did a great job, so I'm hoping Coke will follow.
You bought more Cisco.
Yeah, you know, Cisco I bought for the first time in a really long time. We were here at the deal the day they announced the Splunk deal. And that wasn't really the catalyst for it, but I think if that does go through, it does help with a lot of things having to do with cybersecurity, software. It's a company that even in the absence of the Splunk deal prints money. 3% dividend, consistently growing that dividend. It's just a constant pipeline for cash flow for shareholders.
The next one is an interesting move that you made just relative to this still unfolding story in the Middle East, and we don't know to which degree it's going to escalate beyond where it already obviously is. You trimmed Lockheed Martin. Day after this news broke, I mean, the first trading day was Monday after the weekend. Obviously, you saw defense stocks shoot higher. You sold into some of that strength?
We've been selling Lockheed since September around $450 for relative underperformance. That's how lousy this sector and this stock has been. So looking at this opportunity to sell out of it speaks nothing to what happened over the weekend. It speaks more to the fact that I think there's dysfunction in Washington, and it's going to take some time for them to get maybe their act together to do what we would all hope that they would do, which is to support Israel, to continue to support the Ukraine. I still have some Lockheed Martin, but we've been selling it purely as an underperformance on relative price movement, having nothing to do with the tragic events.
Sure, but if you think that defense spending is going to continue to increase and maybe, you know, the defense hawks, if you would, are even more emboldened now to put more money into defense, wouldn't those stocks continue to go up?
I've had such lack of confidence in Washington over the past year, it violated our price point, so we have to follow the rules. I hope that happens. I hope we can get back into the stock. Same with General Mills. It's a stock I'd like to buy again. But if we're looking at it from pure price performance, we can't wait it out.
You wrote a covered call on Visa and SLB. Tell me why.
We've had some strength in Visa. We wanted to write a call into that strength, and there's been a lot of volatility in SLB. That call's only 4% out of the money, Scott. We wrote it on half the position. But if you annualize the premium, it comes out to a 25% annualized premium. We'll fight for every penny.